I appreciate you guys being here. My name is Alexa. I'm the operations manager for BPM RIA. And I have some wonderful people also here. Anish, our CEO and lead mentor, as well as Jason Clark, the owner of Smart Home Loans. So I'm going to give you guys just a couple of quick announcements. We can rock and roll. We do have a giveaway today. We have a very generous speaker here that is giving 2 people one gift card of $100 for Amazon. You're going to want to text loans to our number 954-800-6961, and I will be putting this information into the chat section for you guys. So if I'm going a little bit fast, just go ahead and refer over to the chat. I will be putting this information in there in just a moment. So we do have some upcoming events. We have a webinar tomorrow with Jose Ramirez. We have our amazing in-person meeting next week, next Wednesday evening at the Signature Grand. We will be having networking from 5:30 to 7, and then educational portion on how to get started in apartment investing from 7 to 8:30. For the networking portion, we're going to have a bunch of great professionals for our audience and members to network with. Jason is one of those amazing people. I'm going to have a lot of really good people there for you guys just to socialize and make connections with in person, which we miss. So we also have a webinar coming up with Nova Southeastern University on April 12th, another webinar with Get Fundable on the 14th, and we are having a webinar with Synergy Title on the 19th of April. So you're going to want to register for all of these.
Yeah, and so if you guys noticed, one of the things, obviously, since the pandemic, we have been really committed into education, especially for our members, the people of South Florida. And, basically all these events are free. So you have no reason not to come to these events. Something, again, like to have someone like Jason, a true professional with 20 plus years of mortgage industry, experience to teach is pretty awesome. The other point is that he's actually paying you, or at least he's paying 2 people to actually listen in. I mean, I wonder if I could text in. Can I text in and win?
No.
You could text in. I guess that probably wouldn't work, huh? So that's really important. And then I know a lot of you guys have been asking me over the years or the last 2 years about the in-person meetings, when's it's going to happen. So I do see a couple of newbies on here that I don't know. So I am the president and CEO of BPM RIA. We are the only chapter of National RIA approved, Dade, Broward, and Palm Beach County. What that means is they do background checks, criminal checks, compliance, all the above. So I think it's always important. If you want to come, especially for the networking, will be awesome. You want to build that power team. Again, we have title companies, hard money guys, regular money guys, flooring contractors, everything you need to actually, flip a house or be in real estate, or you want to use your self-directed IRAs. So you definitely want to come to this. And the other thing is you also meet other investors too. So I think it's always very important on that portion.
Absolutely. I have people calling me all the time, just wanting to meet face to face. So this is your opportunity. If you have any questions about our events, you can definitely feel free to reach out to our office Monday through Friday, 9 to 5:30. If you have any questions about any of these upcoming events that we have. Alrighty, so another way to keep up with our events, which I believe is the best way, because I prefer getting a text. I have lots of emails coming in all the time. So text the word BPM RIA to 954-800-6961 if you'd like text updates for these events that we have. We're not going to spam you. We're just going to give you a heads up when our events are coming up. So go ahead and do that. And once again, all this information will be in the chat for you guys to refer back to if I'm moving a little quick. So we do have our next quick start coming up. It will be May 21st and 22nd. Please just look at this price. It's absolutely crazy. We're running this March Madness special. I highly recommend you go ahead and purchase a ticket right now. We never run this price. We did push it back a couple weeks. You might have seen May 7th and 8th. That was our bad. It's Mother's Day weekend. So we are pushing it to May 21st and 22nd. Please go ahead and buy your ticket. If you have any questions, please respond to the poll. I will be more than happy to give you a call after this webinar to get you more information and just kind of answer some questions. This will be on Zoom. It will be live. You will be on Zoom for 2 days with Anish. We have 4 amazing professional business owners that will come in and speak and just pour into you. We do have, money back guarantee, which sounds crazy, but we do. Everybody loves it. If you have any questions, Anish, go ahead.
Yeah, I mean, pretty much we used to spend over $1,000 on this boot camp, but guess what? I'm saving money on hotels. So that's why we lowered it. And then, I know Easter's coming up and I said, you know what? Why not? Right. So it is a true money back guarantee. So if you hang out for the full days and you say, Nish, this wasn't for me, no questions asked, guess what? I'll refund you. So, I mean, I'm trying to get the idea that, I don't have the money. Now you just need to have the time to do this. So I think it'd be a great event too. So hopefully we'll see you then.
Absolutely. We definitely want everyone to have access to this information. And you are able to do it from the comfort of your home. So if you have any questions, don't hesitate to reach out. I'll be more than happy to contact you directly after this webinar. So as you know, we do have memberships to the RIA. This is where you'll get into all of the in-person meetings for free. If you are a business owner, you'll be looking at the corporate membership to see if we're in alignment, and we can talk about that. But if you'd like to get the entire National RIA benefit package, which includes Home Depot, Office Depot, Office Max, Arcana Insurance, the list goes on, you're going to want to get yourself an individual membership. So you can get into those in-person meetings for free. You'll get discounts to special seminars. And if you have any questions about this, don't hesitate to reach out to the office again. Go ahead and respond to the poll if you'd like me to give you a call back right after this webinar, and we can just, get into it.
Yeah, and also you could actually just go to our website and you can sign up too. But yeah,
Absolutely.
I mean, like Home Depot and Equity Trust, Brand Perfect. Basically, you could almost get a free membership if you're actually spending money at Home Depot. That's what I tell everyone. So
if you just go to Home Depot and Office Depot, it's amazing. I know I shop there every week. So yes, the link is in the chat. If you have any questions, please respond to the poll. We do have one-on-one coaching programs available. This is definitely a very unique opportunity. We have 2 different programs available for one-on-one coaching for real estate investing. I do have my direct line here. We also have a link on our website so that you can actually book a quick call with me to go over any information, what's included in the program, pricing, everything. You can just go ahead and book that right now on the website if you'd like, or you can feel free to give me a call at my direct line. I will be sure to put my information in the chat in a moment. But I have to say, this is a very unique program. We do put up money for our students' deals. We do teach them how to find these deals and basically pay for the softwares that you'll be using to be successful. So if you have any questions, please respond to this chat. To this poll question. And were you saying something, Anish?
Yeah, I was just going to say we actually have a deal closing today where later you'll see it on our social media where Latanya just wholesaled the house for $45,000. So
amazing.
20 grand. I put up all the money. We help sell it. So win-win. I'm always excited about writing checks. I mean, literally, I have a check for her right here. So
nice.
I'll see her a little bit later today. So it's always good stuff. But
love that. And we do try to post these, happenings and all of our student success on our social media. So I just went and put our Facebook groups and Instagram and such in the chat for you guys if you want to just keep up with what we're doing day to day. If you're interested in just seeing what our students are doing, go ahead and follow those pages that I put in the chat for you. And don't hesitate to reach out or answer this poll question and we'll be in touch. I always want to take a moment to thank National RIA, all of our sponsors, our corporate members. We wouldn't be as amazing as we are without them. They do give us amazing resources, tools to be successful, and we couldn't be more grateful to be partnered with the National RIA. So that's my announcements for you all. I'm so happy to have Jason here. It's been a minute. So yeah. Jason. How are you
Hi, how are
doing?
you?
Good.
All
We're gonna
right.
see you soon. It's
Yeah,
crazy.
that's great. That little live event coming up. I'm happy to have those back, Anish. Those are always fun in the past, and the new venue that you guys have it at is really nice. That's a breath of fresh air there. Yeah.
Oof, well, we do need more space. So we
Yeah.
are back at the Signature
Oh,
Grand.
okay.
We were actually so full, and I have more people coming to this event, which is, great
Wow.
for you as a business owner, but
Yeah.
also great for our members as well, because they really miss seeing each other face to face. So we're back at the Signature Grand. We need more space.
Yep. Plenty of
It's
space there.
good for everybody. So we'll see you there for sure. I'll
Absolutely.
call you, don't worry.
All right.
Absolutely. So yeah, I want to introduce, Jason. I've known Jason for, I don't know, we at least 10 plus years,
Yeah, I think
or
it's
we've
around
known
there.
each other,
A decade.
something like that. I think at the same time, the only reason I like Jason is because he has no hair either. So,
Hey, I try my
I'm
best.
very prejudiced or biased, I
I'm
should
I'm
say,
trying to
for
keep up with
bald
the
people.
Joneses here. Yeah. But
I just got to get I got to get a full beard like you.
oh, you
So,
got a baby
uh,
face. You got a baby face. So you should be selling skin
so
products.
yeah, that's
So
it, right? So enough about us. I know the reason you guys are here
Right.
is to see what the heck is happening in the finance world of
Yeah.
mortgages too. So if you want to go ahead, Jason, give a quick little background about who you are
Sure.
and how long you've done this.
Okay, so I'm Jason Clark. I am a team leader for Smart Home Loans. I'm not actually the owner, so I had to correct Alexa there. Maybe one day he'll make me a partner, but who knows? But I've been doing mortgages. I've been in the mortgage business for a little over 20 years. I've seen all of the, I've seen the ups and downs in the business, and quite frankly, we're going through a little period here of an adjustment, but it's nothing like what we experienced back in 07, 08 or anything like that. The banks still want to lend money, and I think that's a good thing for us. But I'm kind of diversified. I do a lot of different types of loans, Anish, and that anything from FHA to the conventional, the regular cookie cutter stuff, all the way to the exotic, bank statement programs, 1099 programs, helping out a lot of the self-employed borrowers, try to just make sure they get their tax returns in order to qualify for a mortgage. I seem to do a lot of that. And that's helpful for a lot of people. But yeah, we're here to talk about, today's mortgage market and see how things kind of come along, and talk about the different programs that are kind of rolling out. So, I kind of wanted just to hit on the rates. I know that we had spoken about that a little bit before. Everyone's always curious about the rates.
I'm actually going to before you go into rates. So, because you mentioned that you do a lot of different products. So what's the difference by going to someone like you versus, my Bank of America down the street?
Oh,
And I don't
okay. That's a good question.
So because, I always thought, hey, let's go to my bank.
Right.
And that's how I'll get a loan versus maybe quote unquote a broker or an alternative lender in general. So what's the differences?
Well, I mean, the difference is service, number one. Number one is difference is definitely the service. Our rates are very comparable to the banks. We can beat the banks on rates. It's just that we think outside the box. We're more aggressive and quicker to react than the banks are. And I think for a lot of, home buyers, realtors, especially listing agents, realtors in the business, they want to speak to a local person and just kind of gauge, how qualified this individual is. So I think that's what sets us apart from the bank. If you call the bank, you're probably going to have to put a voice message in and they'll get back to you in 48 hours and stuff like that. You can always walk into my office. We can meet at Starbucks, Dunkin' Donuts. I'm very flexible in that matter. And your banking, loan officers, they wouldn't do something like that. So you kind of got to, adhere to their work schedule, but
Absolutely.
but as far as
And
rates
so,
go and stuff, we're good there.
yeah, yeah, and one of the things is, so some of you guys might not know my background. I have a degree in finance. I've been a licensed agent since 2002. I've also been licensed for about 20 years as a mortgage person. I'm just not actively practicing it. And I know the question that I always get is, well, if the bank's actually lending, like Bank of America is lending their money, how can your rates be cheaper than the Bank of America person that I go in? And I know it's
Well,
in the wholesale I know you get wholesale rates.
Yeah, we have wholesale rates. And so for us, it's really about building the relationship and the transaction. So if I have a client and or a realtor partner that's referring me business, and we've closed, 10, 15 deals in the last year or two, I don't mind, making less to be competitive in order to beat out the bank, because I want my realtor partner to understand, like, all right, I'm here for you through thick and thin, So the reality is I'll go ahead and make less, and we work on commission, we don't get paid, 9 to 5 or anything like that. So when deals close, we get paid, the banks are a little bit different in that aspect, So that's something that that definitely sets us apart.
Yeah, and the reason is because, banks in general, they have overhead. So that's
Yeah.
one of the things. And if you don't fit in their exact, I don't know, like trying to put a square into a circle,
Yeah.
or something like that, it's really regiment. Meaning, if you go to the bank, if you're not a W-2 employee that make exactly about this, and a lot of times you may not get approved. And I'm actually speaking from experience, meaning I know
Yeah,
what it's like to go to the bank and not get approved. I have a very good accountant, and he makes sure I take the right deductions to
right.
lower my tax costs. So definitely makes a difference too. So, and
Yeah,
as you
that's
talk about, about the rates too, so I'll let you kind of chat about
well,
that
yeah, I
too.
mean, that's, just to touch on that, that's something else that, we specialize in, like, as far as structuring a deal, there's so many different types of people out there with different backgrounds and different work schedules and income sources. So structuring a deal is kind of like an art, as far as putting it together and trying to make it approvable for an underwriter, and like you said, if you're, cookie cutter kind of a deal and you go in and pay stub W-2, you go, with the bank, that's fine. But we're competitive enough to kind of pull you over to our side. But where we really excel is with the self-employed borrower, or people on 1099, or investors that have 10, 15 homes, 4 homes, to try to figure those things out. And we really kind of vet it very well. Like, I'll take a look at it first and we'll send it off to one of our underwriters. Our underwriters will then take a second look at it. This is during the pre-approval process, and then they'll get it back to us. So this way we can confidently say, hey, you guys are ready to go shopping and you're going to close, and we have a very high closing ratio. Deals don't fall apart. And if they do fall apart, we kind of put them back together, and, it's one thing about working with a broker is that I got, probably 30 banks that I deal with. I probably don't deal with all 30 in one year, but, over the course of the years, every little lender that's out there has a different niche product, and so for us, if it doesn't fit for, Flagstar, we can send it to Quicken. If it doesn't fit for Quicken, we might send it over to Caliber, so myself, I know most of all the banks. I have a huge lender directory where all the notes are kind of embedded into theirs for my loan officers to review. And we go over that stuff, like debt ratios, who's capping out and stuff like that. What, debt to income ratios is what I'm talking about. So, we like a lot of different lenders. We're like a bunch of different flavors at the ice cream store. We got every kind of flavor that you want, and here you go. Get a little choice or flavor, like a little taste test.
Absolutely. And just I'm always curious to hear about the people that are listening in. How many guys are self-employed, or are you W-2? So go ahead and put in the chat. I'm just kind of curious to see,
Yeah, that's a good question.
what our audience is, because it'll give us a better idea.
Yeah.
So I got a couple W-2s in there. I know, like, got a couple self-employed, and you could be both too, by the way. So I know some of you guys are W-2 and you're self-employed, or you're also a licensed agent. Okay, we got a couple Arthurs both self-employed. Okay,
that's
and then
great.
the second question I'm going to ask is, how many people have actually done a loan in the last 12 months? Either refinance, investment property, self-employed.
Like a 1099 side hustle. That's a good one.
Yeah. Okay. Ken's done a couple. Okay.
Yeah.
So at least, some of you guys, so you guys know what's been happening out there too. So,
yeah.
Even like the guidelines changed as COVID happened.
Yeah.
So I remember when COVID just happened. It was actually, I think it's about 2 years ago from, I want to say, like last week. give or
Yeah,
take,
you're right.
is
Anniversary.
when it started to happen. And what did you see then? Like when
Oh
I
wow, that
remember
was
seeing those.
I was having flashbacks of 07, 08. I had people calling me up telling me to take my money out of the personal bank accounts, and the world's coming to an end. And I just sat in my office and I just kind of took a deep breath. And at the time I looked at my partner and I'm like, all right, well, here we go again. We're in good position to ride this wave through, but let's see where it gets to, let's see where it goes. Back then the banks, a lot of the smaller banks would just they stopped lending, and we had deals in the pipeline that just got cut off. Hey, we're not funding it, and people were left, at the closing table with nothing. There was nothing I can do about it neither. Sometimes, it was a crisis. So as the months went on, the banks started to loosen up after they really just shut it down like a freight train. They just shut it down. And then all of a sudden they started loosening up. And about May of 2020, I started noticing applications coming in. And that's always a good sign when you see applications coming in, is because you know that there's activity out there and people want to get back out into the market. And so we started really getting busy in May with applications, and then June, July, and then all of a sudden it was pretty busy. There was a lot of different overlays as far as self-employed was concerned. They've peeled off all those overlays, which is great. Back then you had to provide 3 months bank statements and a P&L statement, and they really ran you through the ringer to make sure money was coming in, that you were actually collecting rent from your rentals. And some people weren't, and some people got denied because if they don't see a deposit on their rent in their account from the rents, and you're saying you're using rental income to qualify, the underwriters weren't having it, so they just basically would cancel that. But now they've peeled off all those COVID overlays. So we're back to like just your, regular tax returns, personal or business tax returns, and figuring out your 24-month income. We'll still need a P&L statement for self-employed just to kind of gauge where we're at. But they're not looking that hard anymore at the 3 months bank statements, and, that was one of the overlays. And then another one was with the appraisals and stuff like that, where honestly, I thought it was a good thing, where they were doing a lot more drive-bys and they weren't letting people into the homes, and so we were getting our appraisals back pretty quick. And then all of a sudden, probably around last year or so, around August, September, it just kind of swole to a point where the appraisers were slammed and they were charging an insane amount of money, and they still are, and we had to kind of adjust to that. And that was something I had to tell my partners, my realtor partners, my customers, like, look, the $500 appraisal is not there for conventional anymore. It's like $800, $750, and those were the numbers we were seeing.
Inflation.
Yeah, well, I
Inflation.
mean, you know what is, like, years ago when the crisis came, the lenders had to get away from having their own appraisers. Okay. And so the appraisal panel became a thing, right? So the appraisers went through that, that time period. And when it got really busy, the appraisers just said, look, I'm not going out there for $500. I'll take the $800. And there was other lenders that were smart and kind of hip to what was going on. So they just started jacking up the prices and making it $800 to get their appraisals done quicker. Okay. And the lenders were footing the bill for it. So I had a few lenders where I disclosed $550 and the lender said, no, it's $800. And I said, well, my customer doesn't want to pay for that. And they said, that's fine, we'll cover it. We're a lender, we got money. So I said, all right, good, you guys do that. But it was a little bit of a bitter pill we had to swallow. And so now, as far as disclosing to customers, now credit reports are a little bit more expensive. Appraisal reports are more expensive, especially for duplexes, triplexes, quadplexes. You have a rental analysis in there, so that can run another couple $100. So as far as that's concerned, with COVID and stuff like that, like, we're kind of back to normal with the appraisers. And honestly, the way the rates have kind of rolled up on us in the last couple of months,
Right.
The appraisers are starting to get back to a more of a normal schedule, but their prices are still the same. They're pretty high, they're not coming down. But that's just a sign of the times, I had to tell one realtor, I'm like, take a look around, everything's going up. I mean, why wouldn't an appraisal want to charge more money? And that's just the way it was. But we're still able to get these deals done in a 30-day period if we had to.
Absolutely. And obviously you touched on some points about rates.
Yeah.
So what have you seen, I'd say, in the last 6 months, right? What have you seen?
I mean, in the last 4 months, you've seen the real, I mean, honestly, in the last 2 months, you've seen a real drive going up, and like just for this morning, I priced out like a regular FHA 660 credit score for a primary purchase. You're probably at 4.25, and last year you were easily in the high twos,
And that's for a 30-year fixed, right?
yeah, 30-year fixed FHA for a conventional with a 720 score. You're looking at, with 5% down, 4.75. All right. Last year, you're at 3.1, 3.25, so they've gone up a lot. And what's happened with the investors, the way they kind of wanted to cool the market off, because everybody was coming to Florida and Texas and all these places and snapping up all these homes, a lot of investors. And I'm all for that, but it does put a strain on the primary buyer, or first time home buyer. And what occurred last year was Fannie Mae actually increased their loan level pricing, right? They went up like 2 points. So it was, you can still get the rate, but it's going to cost you now more money in order to get that rate. And so now investors would start to think, wait a second, do I want to buy that quadplex? And instead of getting a 4.5, I'm going to have to take a 5.7 and pay points, The reality is, if you're an investor, you're going to invest in a good market and a bad market. And then sometimes, that's just the way it goes. So money's still cheap, theoretically, it's still cheap. It's just not bare bones where it was a couple of years ago. That was an amazing time. Let's just put it that way. People were getting 2.25, 2.5. And, I would tell people, pay the points, like you're not going to get this rate ever again. Like it might cost you a point to get it, but just pay it, because in the overall, you're going to save a ton of money on interest and you're going to pay your house off so much quicker. And I mean, if you're at 2.25 or 2.5 or something like that, like that's a lot of bragging rights, especially, down the road and somebody's getting a 5%. You're like, I got a 2.25 in 2020. So
absolutely. I mean, the funny part is that we've been in the mortgage or real estate industry around the same time, I would say. So
yeah.
Do you remember what the rates were when you first started?
Yeah, they were 6 and 7, and that's where it was, and they were even higher than that in some cases, but those were normal rates back then. The thing is, it's like the prices of properties have ran up so high, limited inventory. And then you combine that with the rates that are quite a bit higher. So there's plenty of buyers down here, there's plenty. Yeah, obviously, you go to an open house, there's 50 people there, The reality is there's just not enough homes. So we need investors to buy more homes to flip them.
Absolutely. And the point of I wanted to make was that even though we're talking about the rates going up a little bit, if you really figure it out, you can make it up on the rental with people too. So there's a lot of ways to basically pass on the cost, if that makes sense. So don't let that rate end of it really stop you if it's a good deal. So don't get caught up. Let's say if the rates go to 6% in a year. Back when we started, it was obviously around 8-9%. I was doing loans for. People were buying stuff. The old timers that you talk to them in the 80s, the rates were 11, 15, 17%. Yeah, something crazy. So don't get caught up on that end of it. It's about cash flow or cash on cash or whatever you're doing to make sure the numbers make sense. So I think that's always important, that you're really it's just gonna be another reason to stop you, if that makes sense. I mean, the other thing I've seen, as you're talking about the competition on that portion. So what's the difference between a pre-approval, I've seen pre-approvals, general ones with the big box, places, versus the pre-approval that you do?
I mean, banks would give you a pre-approval letter, right? And they'll send you out there shopping. And if you're, if you're ignorant, to the way the market works, you're probably not going to get your deal taken, and your realtor probably couldn't even put in a legitimate offer. So what we do is we offer the pre-approval letter, right? And we also combine that with a DU, right? A desktop underwriter for conventional FHA, VA loans. This way that the other party knows, that we've vetted all of their information, their income, their assets, their credit, collections, whatever it might come up on their credit reports. We vetted it. And so we package it up nice and neat, send it over to the client, send it over to the borrower. And 9 times out of 10, they can always reach out to me, the listing agent, to speak to me, or I'll reach out to them so I can kind of sell them on my buyer and say, hey, listen, this guy is overly qualified, 700 plus credit. He has, good assets, he's W-2 or whatever the case may be. But that's a good, strong pre-approval. Getting pre-qualified from a bank is not going to work in today's market. If you just walk in with a letter from Wells Fargo or Bank of America that says, hey, I'm pre-qualified up to $600,000, the listing agent's just not going to take you serious. And I don't think your realtor wouldn't either. Your realtor would probably say, where's my DU? And then there'll be others that say, well, you can't give a DU because of XYZ. And, there's ways of working around certain things, it's a gray area of the rules and stuff like that. But if it's not those types of loans and it's like a conventional loan, like an unconventional loan, let's say it's a non-prime loan, and that's going to come into the salesmanship with the realtor and myself, because if you have a bank statement loan, for example, and you're buying $1 million property, you're putting down 20%.
So, Jason, I know you're nerdy like me with our finance stuff and mortgage. What do you want to explain what a bank statement loan means?
You mean nobody knows what a bank statement loan means? All right. So bank statement loans, right? If you are, let's say, for example, you're self-employed, right? And you didn't file a strong enough tax return in order to qualify for a conventional mortgage or a jumbo mortgage or something like that. But you got plenty of cash coming through your bank account, right? Like a convenience store. I did a loan for a convenience store, tons of cash coming in and out of there. So what we do is we take 24 months personal or business bank statements, all right? And we will calculate the actual deposits that are dropped into the account to come up with your income, okay? For personal bank accounts, we use 100% of the deposits. And for a business bank account, we can use 50% of the deposits, okay? There's a workaround with business where we can get a letter from your CPA stating that your expense ratio is lower than 50%. But if you're a construction company or a trucking company, you probably got a high expense ratio. If you're a real estate investor or consultant, you probably have a lower expense ratio. So that kind of helps you out. So we'll take that number, right? Once we get the income done, and that's the hardest part is getting the income verified and done, because there's going to be certain deposits that we can't use, like some ATM deposits. I had one guy had like 10 ATM deposits back to back to back. Say it again.
You can't use transfers, can you? Like if I kept transferring money between accounts.
Yeah, I mean,
like
they back out the transfers, right? Like, they're going to want to see that account, but they want to see, deposits and legitimate, deposits that are coming in and out of there, not just, $500 every day on an ATM deposit. That's kind of hard to justify, I tried, but it didn't work. So the reality is we take that income. Once we get that squared away, we give you the pre-approval letter. And then at that point, it becomes the realtor and myself educating the other listing agent that, hey, look, this is you're not getting a DU. This is an unconventional loan. It's a bank statement loan. Talk to the broker about it. Here's a proof of funds if you want to see the proof of funds to submit your offer. And that's your bank statement loan. They're great loans. The rates are higher, obviously, than a conventional or an FHA. It's going to be a little bit more in closing costs, but the reality is, you're kind of sidestepping what you might owe to the government. Let's put it that way, So
yeah, and I'm going to tell, so just so you guys know, Jason actually, he did one of my refinances, and I had to do a big bank statement loan. So traditional financing, conventional jumbo did not work. I did the cost benefit analysis, so showing more income and paying more taxes versus the interest rate.
Right.
And it was like a no-brainer, right? Like, do I want to write a bigger check?
And honestly, you got a great deal too. Obviously, the rates are a little bit different now, but you did good back then, so that worked out.
Fantastic. And the irony is I took out the money and I leveraged it for something else. Yep. So, and I get the tax break and all that other good stuff. But, most people don't know about that loan. I can't tell you. We just had a recent friend of actually both of ours, Alex, he bartends. And, he didn't know that there was a bank statement loan. He actually, when I spoke to him about a year ago, he spoke to another lender and they said, you've got to at least put 50 or 60% down on a house. And I was like,
Yeah.
in what world is that? Does that make any sense? So, an
Yeah,
excellent credit.
that was a fun deal because I thought the same way, and when I actually looked at, he was a W-2 employee, right? But he had put away a nice chunk of change, and he was real diligent about saving money, which is great, like
Yeah.
that's the root of everything, right? Saving money. But he did such a good job. But when I kind of looked at what he was buying and we just figured out his income, we went straight W-2 with it, and we got him a sweetheart deal. He didn't have to go the bank statement route, even though he could have. But it was a condo for 230, and it made sense, and it just squeaked underneath, the debt ratio, and we made it work. So he was super happy about it.
Mm-hmm. And the funny part about him, just so you know, he got turned down by 3 other lenders, and he was actually going to give up on it. So and I said, no, here, talk to Jason. And, the idea also with working with someone like Jason, or that's a broker that understands it, tell him everything. Meaning, don't try to, when he pulls your credit, he's going to find out. If you have a bankruptcy, it's fine. Tell him up front. Do you only have this? Be upfront with everything that's really happening. And, a lot of times, newbies or people don't understand, the mortgage person or the lender should be on your side. Of course, they're trying to protect,
100%,
make sure it's a good loan, but you really want to disclose everything up front versus finding out down the road.
It's kind of like going to church and doing a confession, and just, you have to trust me and just spill your guts. And I want to be able to figure it out so I can structure it so that this way we're on the same page. And you're fortunate enough to go ahead and buy something, And so listen, you just have to explain everything to me, or I'll figure it out, because there really isn't too much hiding with numbers, at that point, it's like, wait a second, I see what you're doing here. This doesn't make any sense. Where's where does $30,000 deposit come from? Well, I had 30 grand saved up on my house. That's great, but that really doesn't happen, in I can't say in real life. I'm sure there's people that have cash, laying around, stuff like that, but we need it in your bank account. And so how do you justify something like that? Maybe you get an invoice, maybe you sold the car. I had one guy that was pretty smart. He owned a Bravo supermarket, and he was always selling these cars and coming up with these large deposits in his account. And I said, hey, where's this from? He goes, oh no, I sold the car to Automax. I said, oh, that's great, for 30 grand. And he did it like 3 times in a month. And I was like, that's pretty smart, So it made sense. He buys them cash. He goes to Automart. He sells them. He gets the invoice, and it's all justifiable. So it makes sense. So we dig in deep before an underwriter digs in deep. And sometimes we miss it, and sometimes something might come up and underwriting catches it, like, hey, what's this all about? And we just have to address it and work around it. And the one thing about brokers compared to banks and stuff like that, we fight, behind the scenes, we're fighting. It's a drag out brawl. It's argue with underwriting and managers and appraisers and insurance guys. And then we got to get on the phone and say, hey, look, everything's okay, because we just beat everybody up for you over there, So
Jason, is that why I always see you at the gym so much?
I have to be in shape because these underwriters, they'll kick my butt, So I definitely got to make sure I'm mentally focused for the day. And quite frankly, that's how this business is. And I'm pretty sure it's like that in your world too. You have to mentally focus and find some downtime and get ready for the day, because it gets busy. And when it's slow, but it's not always slow. And when it gets really busy, you got to be able to handle that stuff. But I like being busy.
Absolutely. What about, I know we have investors on here, and some of the investors want to buy stuff in their LLC,
right,
versus their personal name. So do you do loans or in the LLC, and what down payments or rates? What do you usually see, generally speaking? Again, guys, just so you know, these are all general things we're going over, so you can't hold Jason to it. And say,
you can't break out the recording
and say, hey, what about this? You told me this. So again, we're going over general guidelines, right? I found a property and I want to put it in my LLC because I spoke to my attorney, for asset protection. So what requirements do you need for a loan in an LLC?
Well, we have, last year, a couple of years ago, they started coming out what they call this DSCR loans, like debt service ratio loans. Okay. And basically that's a loan where you don't have to provide any income. There's no pay stubs, W-2s, tax returns. it's basically predicated off of the rent versus the mortgage payment, right? So a lot of investors utilize those loans. You got a 30-year fixed, you might have a 2-year prepay on some of them. Some of them you might not have a prepayment penalty fee, you know. The rates probably are somewhere in the north of 5.5 to 6.25, maybe even hovering around 7 right now. But they're great little programs that investors really take advantage of, because you can get in a property with 20% down, and even now they're starting to roll out 15%. Like a lot of the lenders, the more exotic lenders, are getting very aggressive, and they're all kind of cutting each other's throat, like, oh, one of was 20%, now it's 15%. But the reality is they want that investor business because there's a huge appetite for it, especially for people that are buying and hold, and you want to rent. So those loans are great. If you're buying in an LLC, they will let you buy in an LLC. All right. We just have to provide the documentation. We got to have an operating agreement that shows that you're 100% owner of it. If there's any other owners on there, they can't have more than 10%. So you got to make sure your operating agreement is adjusted accordingly. But with those loans, you can actually go all over the country, and I can do them all over the country because they're kind of classified as a business commercial loan. So we got closings in like Pennsylvania and Texas and stuff like that with those DSCR loans. And, they're great little product for investors. A lot of investors utilize them.
So I'm actually like, that's a great, definition of these, loans. Like,
Right.
You want to kind of give an example of what that means, like on a property, how much rent, like, or what ratios you're seeing. So if you made $2,000 a month,
right,
on a rental, or on that, so your new payment has to be how many times less?
Yeah, like the lenders, it's your overall principal, interest, tax, and insurance, right? So we got to take that into account. And they have a factor where it's like, I can't remember, it's like 1%, I think that's what it is. If it's under 1% factor, then the rate goes up a little higher because it's a little more aggressive. It's not cash flowing as well. If it's above that 1%, then it's cash flowing well. So basically you're taking the mortgage payment and you're dividing it by your rent. Okay. And right now we actually have a really cool product for foreign investors, and a lot of foreign nationals are starting to move into the States, obviously because the USA is the best, right? So everyone's moving here. I got a Canadian couple that are moving here as not moving here, but they're investing here as foreign nationals, and they didn't think they can get a loan. Their realtor's like, I don't know where to bring you, but they brought them to me. And they're putting down 25%, no income, basically saying, hey, look, we live and work up in Canada. And their rate's probably like 6.5% right now. I just got an email a little bit ago, like, hey, a rate adjustment coming in. So I have to let them know, like, there's probably going to be an increase in the rate. We haven't closed yet. Yeah. But that's another program where there's no income, to verify. It's basically, no credit. There's no credit being pulled. So if you're a foreigner, or if you know of any foreign nationals that want to move to the States and invest, we have good programs for that right now.
Yeah. I mean, so you can't be, obviously I have a social and stuff, so I can't tell you like, hey, I'm a foreign national just to do that because, it's easier for me. So you got to make sure when Jason's saying foreign national, that means no social security number. Right. It doesn't mean that you have no credit. So you can still have a social and not qualify for that. So I think it's important. Correct. I'm going to kind of just run through a couple of questions too, as we're going through here. So Michael's just asking, how much are appraisals now? I know you kind of gave a range before. Yeah,
they vary. Like right now I'm disclosing 750 on appraisals, and if they go a little higher, they'll notify me. It just depends on the lender too. Like if we're submitting it over to Quicken's probably, $700. If we're going to UWM, they're closer to $600. Maybe Caliber's closer to $600. So it does depend on the lenders.
And also if it's a duplex, triplex, fourplex is different. And also if you're buying, I know like luxury, like you're doing a 10,000 square foot house is going to be a different price too. So commercial loan, same thing. If you're looking at commercial properties, it's going to be different pricing. So the answer is it's kind of all over the place.
Yeah, I saw another one about 1-year tax programs. Did you see that question there, Nish?
Yeah, it was in the chat, but yeah, go for it.
Yeah.
Do you have
Oh,
any? And do
so
you have any
I saw
programs?
that. So yeah, we do, right? We do have this program, and it's funny you say that because I just refinanced a lady. I did a cash out, and we used a 1-year tax return program. All right. So the rule for that for conventional financing is you got to be in business for 5 years, right? So it's got to be open for 5 years. And then we can use your most recent tax return. Okay. So in this lady's case, her 2019 was really, really low. Her 2020 was really good. Okay. She hasn't filed 2021 yet. We just closed a little bit ago. So we were able to use the 2020 tax return as income for 24 months. Okay. Her credit score was like a 660, and it was like a 59 or 60% loan to value. But that program is out there. It's sponsored by Freddie Mac. And so if you fit in that little bucket there, we can do a 1 year's tax return. So if you had a really great 2020 and an awful 2019, we don't want to average that income out for 24 months. We'll just take the 2020 and use that. And then you can go ahead and purchase with 5% down or 3% down if you qualify for it for conventional.
Yeah, and also with Freddie Mac or I know for a fact you need to have some higher credit score or a high credit score. You can't be rolling in with under 600 hoping for 1 year tax returns. More likely than not.
But if you have a 600, we have a program for that too. But you're gonna have to break out your tax returns.
Yeah, exactly. Adelina's asking, what's the minimum loan for your DSCR loans? Or do you want
The
to
minimum loans? I want to say like some lenders are probably going to cap it at 75 or maybe 100 grand. Okay. So it depends on the lenders, but it's either 75 or 100K where that's the minimum loan amount. They won't go below that because it runs into these compliance issues with high cost loans with the points and fees and stuff like that. The lower the loan amount, unfortunately, it starts to become a problem, you know.
Absolutely. Arthur's asking, what are the rates now for investment properties? I know you kind of touched on that. And would I need to take it out of my LLC and put it under my personal name? So he has it, he owns the property in his LLC. He wants to probably refi and cash out, I imagine, is what I'm looking at. Would you tell him to quick claim it into his personal name to refinance, or would you tell him to?
Okay, so if you're going with like your conventional loan and you want to get the better rate, okay, I don't know. I would have to take a look at the rates for investments right now. They're probably up between like 5.5 or something like that. They're getting up there. But what I would suggest is, number one, is the LLC in your name, right? Do you own it 100%? They're going to want to know that information. If there's any other partners on there, they're going to want to see those partners taken off. So that's a little bit of homework with Sunbiz or wherever you might be registered.
He said yes, by the way. He just said yes. He is 100%.
All right, so he's the 100% owner. So in that case, what we'll do is we'll just notify the underwriter that you are going to refinance this property out of the LLC. You're the 100% owner of the LLC. It's going to be in your person's name when you close. And at the time, the title company will prepare like a quick claim deed or something like that to peel you off of that LLC. And then you own it by yourself. What you do afterwards with it is up to you. So if you wanted to put it back in the LLC,
I'm going to start with, I'm going to start with Jason, the disclaimer he's going to say, and I'm going to say the same thing, is that we're not lawyers, so we're not going to offer you any legal advice. There's pros and cons to both. So that's really something you should go talk to your real estate attorney. Arthur, we have a bunch of real estate attorneys within our organization. And it's really hard because, it depends how many properties you have too. So that's why it's not a clear-cut answer, but if that's what you want to do, it's possible. It's basically what I'd rather get to. So Andrea's asking, is the Equity Act 25K down payment available?
Say that a question again. Is the equity at 25K, like 75%
available? I'm not sure what the Equity Act of 25K. I don't know if that's a government assistance program.
I don't know. Sure. I'm not sure about that question there. We'll have to get back to that one. Have to circle back.
And Andrea, if you email us or email Jason, we'll definitely get the answer for you too. So how do you substitute or coordinate with government pandemic real estate loans?
The government pandemic real estate loans. That's a good question. I need a little more information on that. I am not 100% sure what that means. Like, does that,
I'm not either.
Like what we've done, all right, and we've had people that had stopped paying their mortgage, right? And what they do is they work out a plan with their current lender. So if I have a mortgage and I can't make the payments, lost my job for the pandemic, and I didn't pay for 6 months, and I racked up 30 grand. And this is like actually a real scenario. They racked up 30 grand in payments that they haven't made. So what they do is they do what's called a HUD partial lien, right? So basically you're signing off saying, hey, look, I promise to pay this money at some point, whether I refinance or I sell the property. And they put that on the back of the loan, or they don't even put it on the back of the loan. They just set it off as another lien. So what we do is we actually if you have to refinance, you got to pay that partial lien off. So we have to get your first mortgage plus the partial lien, make sure you have enough equity in the property, and do a cash out refi or a rate and term. Well, actually it has to be a cash out refi because we got to bring that up to date. Okay. The good part about it is it kind of helped you through the pandemic. The bad part about it is you still owe the money. At the end of the day, like, no lender's that nice. They're not gonna just let you off the hook. So that's how that would work if you had like a partial lien HUD type of loan that you had to pay off during the pandemic. And we've done a couple of those, quite a few of those actually. They were kind of unique, but they ended up working out.
So let's see, I got another person. I want to get into the real estate again, and my credit's in the toilet. Do a couple failed restaurants. Is it better to file bankruptcy and just start fresh with credit billing, or do I wait it out, but then I can't do much? Advise. Okay.
Listen, I filed a bankruptcy back in 2010. I had to go through something like that. February. Yeah. So and I know how that goes. Chapter 7. It was just, I had to. I would try to avoid that if I could. I had a lot of properties and a lot of debt and no income coming in. The market tanked, and that's what I had to do. But I had a buddy of mine file a Chapter 13. He paid it back within the 5-year allotment, and he made out like a bandit. It was one of the best things that ever happened to him, because with a Chapter 13, you could say, well, I own these 4 properties and I say they're worth 50 grand, 100 grand. You're basically telling the trustee they're worth very low monies. And so that you pay based off of that. And then throughout 5 years, it appreciated to being a lot of money. Once he finished, he sold for a nice little chunk of change. I don't know about filing a bankruptcy. If you can pull through it, go for it. But if you can't, file the BK, get it done with. Outside of 2 years, once it's discharged, you can go FHA, purchase a property, FHA. Right now the loan limits for FHA down here in Miami-Dade, Broward, and Palm Beach is 460. So you can still get yourself a decent home. All right, that's good. It's going to be I believe it's 4 years from the discharge date for a conventional mortgage. Okay. I have to double check that, but I think it is 4 years. So, it's not the end of the world, you bounce back. And
what I'm going to add to that is if this person, if you start building some cash, there are hard money lenders that we have that's just based on assets. So they're not going to actually quote unquote check your credit. So you can do deals. The other end, if you really want to get into real estate, obviously, I'm going to be shamelessly self-promoting, is obviously we have a coaching program where I put up all the money. So there's a lot of different ways to get into the real estate game. Also, if you might, you can always partner with someone, right? Maybe there's a family member on that portion. So don't let that bankruptcy stop you. You're talking to 2 guys if you would have talked to us in 2010, it was, I don't know about you, but it felt like the end of the world. For me, it's almost comical to think that, I wish I could have went back to myself and said, hey, things are going to be okay. So I think that's always important out there too. I'm going to kind of change the conversation a little bit. So meaning, I know a lot of newbies or investors, they want to actually get into house hacking, right? So where house hacking is where they live in they buy a duplex or a fourplex and they live one of the units. Mm-hmm. So let's say I have a good job, right? Mm-hmm. Right. I make a W-2 employee, and that's what house hacking is. Are you seeing newbie investors maybe do an FHA loan on a fourplex? Do you want to kind of, because I know we've actually done one client. Our membership.
We had a good one over there in East Fort Lauderdale, and that guy, I think his name was Jeff. he made out like a bandit, like I was proud of him when he closed. But yeah, I've done a lot of those in the last couple of years. It was almost like who let the cat out of the bag, like all of a sudden I had a lot of new first-time home buyers taking advantage of the FHA program where you could buy a duplex, triplex, or a quadplex with 3.5% down, get a really good rate, even get some lender credit if you wanted to, and live in the property and then rent the other side out. And now, maybe half your mortgage is being paid for, and it's a nice little investment tool. Those are great. The thing is like since 2020, the prices for multifamilies have gone up like so significantly. It's like you really have to qualify, I mean, the rent's there for it, but you really got to qualify, and you got to be able to, swallow a big mortgage payment, because that's what it is. There's good debt and there's bad debt. Good debt is having a mortgage that's paying off your property.
Absolutely. Let's say I wanted to go into, I found a great fourplex, right? And everyone's month to month and whatnot. And I'm going to live in it. And let's say I qualify for FHA or conventional, whatever that amount. Will they count the income on the purchase for me to qualify? Like maybe I don't make enough with my own end of it. So they'll count the rents from the other 3 units.
Yeah, absolutely. To answer your question, yes, they absolutely count the rents. Okay. We can use that to help you qualify. Those are very like little sensitive types of transactions, because I always tell my customers that we do that for, especially if they're on the bubble. Like, I have a lady right now who's trying to buy one for 475, and I said, look, whatever property you get, check with me on the taxes and insurance. Let me run the numbers every time, because I just can't say, yeah, go get it. Let me rerun it every time, because the rents are going to change, the taxes, insurance, and stuff like that. So yes, to answer your question, definitely will help you get it pre-approved, but you always want to check in with your loan officer to make sure that the numbers are making sense before you lock up that contract and follow through. But that's a great little product to get people involved into investing.
So one of the things, and I thought that's a really good point, is that just because you get pre-approved from Jason or whoever you're picking on that portion, make sure when you're about to make that offer, make sure you let Jason know so he can run the taxes, because he's going to just estimate taxes and insurance. So once you find a property, he still has to estimate the insurance, but we have the taxes. So I've seen numbers that you're like, oh my God, they qualified, and then the taxes are this X amount,
right?
And now they don't qualify.
Right.
So I think that's always the challenge that you have to figure out before. So just because you got the pre-approval, give them a quick call, say, hey, what about this? What about that? So that's always important, when you're actually finding the property too. So
insurance, taxes, rent, all that comes into the equations for those multifamily properties. But they're great. I wish I would have bought one of them.
Yeah, absolutely. What about, if you want to put it in the chat too, I'm just kind of curious too, is how many of you guys have Airbnb or short-term rentals? So I'm always kind of curious to see about that. And what my question is going to turn into is, do you have a product for short-term rentals, whether it's a purchase or a refi, and what do you need to count? Like, I'm just going to use my normal rental is $1,500 a month is what I'm getting. But guess what? I know I could Airbnb it and make $4,000 a month or $5,000, whatever the number is. What are there, first of all, lenders out there that will use Airbnb or short-term rental income, number one, and how many years, or like how do they verify that?
All right. So to answer your question, yes, there is some non-prime lenders that are starting to use that. The conventional side is a little slower to come around because it's still kind of unstable, but what they're starting to roll out is if you have a 2-year history of renting your Airbnb out, what they're going to want to see is the actual receipts and invoices from Airbnb. Okay. So, I mean, on your tax return, it might say one thing because there really isn't something on the tax return for that. So they don't go off of that. They'll go off of what Airbnb is sending over to you. So you'll get a printout of all the payments that are being sent to you per month from Airbnb, and we'll use that as evidence to go ahead and use that rental income to qualify. Okay. So it's a little bit more, intense when it comes down to getting all the documents and making sure the numbers work because it's Airbnb. But yes, to answer your questions, the lenders are starting to get more flexible on that.
Would that also work on, this is my own curiosity, let's say I'm trying to buy a house that has 2 years of Airbnb, so would I get the documents from the seller to show that, or is that really because what you're talking about on a refinance?
That's really on, that's really just used to use income in order to qualify.
Okay.
When you're saying
Got
is
it.
buying a short-term rental, I gotta actually check into that. I don't think I've come across that, it's not popping out. I get emails all the time from different lenders and their products and stuff like that.
Sure.
So I'd have to do a little bit more research and get back to you on it. But I don't know of any lenders offhand that are like, yeah, short-term rentals, we're okay with it. Here's the proof. Maybe there is, and I'm glad you asked me
Right.
about it. So I'll find out and I can get back
Yeah,
to
I'm
you.
always just curious because I know everything moves and, depending, like, as investors, we're looking at cash flow.
Yeah,
So it might not make sense. And actually I've wholesaled houses to Airbnb, people who
nice.
paid, 20% more than a normal person would, because they're
Wow.
looking at cash flow. So it just
Yeah,
makes a
yeah,
big difference on knowing that. And, if you're a short-term rental guy and, you'd gladly, pay an extra 10% or 5% more
mhm,
just to get the deal too. So I think it's kind of interesting.
yeah.
What we're seeing. Are you seeing, like, I mean, obviously you're not a mind reader of what's going to happen. What do you feel about, like, in general, like the mortgage or lending industry? Meaning, first of all, rates. I could kind of guess
Right.
what I feel about the rates, what's going to happen. But what about, like, more people getting in the space? Because what I like you touched on is
Mhm.
there's more lenders being aggressive.
Yeah,
Are
yeah.
you think there's going to be more people getting into the game, or like, what
Well,
are you seeing or what are you
I
hearing?
just feel like lenders have gotten, the lenders have gotten smart where they're understanding, that people are not your traditional W-2 pay stub employees. There's so many more gig jobs out there. There's so many more investors, Airbnb. There's all these new even job titles, that weren't here 10 years ago, Instagram marketers and stuff like that. Influencers, and things of that
Influencers,
nature,
yeah,
right?
definitely.
So the lenders are understanding, like, hey, we can offer these products because these people have great credit and they're cash flowing and they got money in the bank. They just don't fit into that conventional bucket. So I see that the lenders are getting aggressive with rolling out a lot of new programs, okay, which is great. Competition is good because it starts to level things off a little bit. I still see that, because there's so much appetite for investor purchases, it will squeeze out a lot of the primary, especially down here. It's kind of hard, but primary buyers, first-time home buyers, stuff like that, which might be, a little bit tough for people to swallow. Like, hey, I can't buy a house in Miami under 400K. Like, that's
Right.
probably what it is. That's still a lot of money per month for a new couple, to pay for. But to answer your question on, as far as what I see is, yeah, I still see lenders rolling stuff out all the time, always getting new updates, jumbo loans. I just saw one jumbo loan with Caliber, 3.5% down, 5% down, mortgage rates allowed. Like the jumbo appetite is also very aggressive because all the prices have gone up, and
Absolutely.
obviously with the prices going up, you're falling out of that, 647 K max loan amount for a conventional, so
Yeah,
it's
yeah. So do you actually, it's funny, we didn't even touch on it. Do you want to
I
actually
know.
go over what the limits are on conventional and
All right, yeah,
FHA?
that's a good idea. So $647,000 is your maximum conventional loan limit, all right, on a single family home, Dade, Broward, I'm sorry, all over the place. That's the whole country, right? For FHA, it's a little different, right? So down here, Miami-Dade, Palm Beach and Broward counties, you're 460 on the loan amount, okay, which puts you like around 475 on a purchase price. But then, like, if you go to Naples, it's, I think it's like 490. If you go up to, Orlando, it's like 422. So it's different from, county to county. So always got to, kind of check with me on something like that. But those are the two loan limits that are the most, notorious, that everybody wants to know about. When it gets down to duplexes for FHA, you're probably in the 550 range. And then when you get into the triplexes, you're in the 600s, and the quadplexes, you're in the 700s. So the more units, the more the loan amount goes up that you're able to qualify for. So that's why I say, if you're going to buy a quadplex for $800,000 and it's cash flowing, I mean, that's a big mortgage to swing, you know, and you got to be ready for something like that, because I know I don't want to see like a $7,000 mortgage on my credit report, but you know what? It's good debt, you know, as long as it's paying off.
Yeah. And you know what? We didn't even touch on our veterans about VA loan. So I don't know if anyone's a veteran. So I want to, first of all, thank you for your service. But there's some great loans out there that where you could truly go 100%. Right? Do you want to kind of talk about a little bit about that too?
Yeah, we love our vets. We always want to take care of them. And I just had a gentleman who was, you know, buying in Lennar, right? So he bought a $689,000 purchase in Lennar. He got it contracted last year. It's going to be built probably next month or something like that. And I've been dealing with him for about a year, you know, and then he finally came to me, hey, listen, I want to get a mortgage. The other guy over there is charging me, I don't know, it was a crazy rate, like 4.875 plus points. And I said, listen, that doesn't sound right. You know, it doesn't make any sense. Let me take a look at that for you and we'll see what we can do. So with veterans, you know, you can get 100% financing, right? That's great. We can definitely do that. But there's two ways in my world to price a loan, right? So there's two ways. One is a lender paid option and the other is a borrower paid option. Okay. Lender paid option is basically the contract that I have with the lenders that says, all right, you're going to get paid maximum 2.75 per transaction. That's as the maximum we can charge. Do we usually charge that? No, we usually have to be lower than that. You know, I don't know where, but you know, 2 points, 2.25, sometimes 2.7, we can make it. However, in the veterans case, we can only charge 1 point. Okay. And so what that does is it number one, it drills down the rate, you know, from a 4.87. I was getting this guy at 3.1 and he was ecstatic. He's like, I can't believe that this guy was trying to rip me off. And I said, look, it's Lennar. Lennar is a great company and they do a lot of wonderful things, but the mortgage loan officer over there wasn't really educating you on your options. Okay. And he was just charging you as much as he could charge. And quite frankly, I thought it was unfair because he is a vet and it's a $689,000 property. I mean, that's a lot of money for your mortgage payment, right? So we got him, you know, we worked it out where we charged a 1%, got him a 3.1, and then everything was going fine until the lender got back to him and said, we'll match it, you know? And so he got back to me and said, look, what should I do here? And I said, look, you know what? It's like David going against Goliath. I've dealt with Lennar before. They're tough. Okay. But look at it like this. I just saved you a ton of money. All right. Just refer me some business when you get a chance. You know how I operate, you know, and we'll make it work. It's okay. Like I prefer you to close your deal. It's going to be a smoother transaction with Lennar because Lennar was already saying, well, you know, if you don't close on time, we got $500 late fees. And I said, why wouldn't we close on time? You know, but that's just the way they operate. So we made a deal and I think he's closing next month or something like that on his property. But for the veterans, definitely know and understand that like you have options. Okay. Just don't take, you know, what somebody's telling you for.
I mean, you could literally do 100% financing.
100%.
So if you're a veteran, you know, it's the perfect idea to take advantage of it. You're not really coming out of money, just closing costs. And actually, I think you could actually get seller concessions, I think up to 3%, if I'm correct.
Yeah. Maybe. I mean, Lennar was dropping their builder fee for him and stuff like that. And so they were doing, you know, a nice gesture there. But I just, like I said, I just told him, stick with the builder. It's going to be a smoother transaction. And quite frankly, he did the right thing by shopping around and getting a second opinion. And that's what we presented to them. And that's what they wanted to see.
I mean, you literally saved them thousands.
Yeah.
You know, because he called you, right? He basically was able to use what you told him versus on that.
Right.
And just in general, guys, I mean, Lennar, obviously that's a builder kind of thing. Mm-hmm. Do not use Jason to try to price shop, meaning Jason's gets you pretty like, yeah, no, I'm going to go back to my lender. I've been on that side. If you do,
I'll figure it out. You know, I'm pretty smart. I'll figure out your price shop. I mean, it's okay. Like I get it. I'm in the business that we're supposed to price shop, but I had one customer that basically put in her subject line, like lender hunting, you know, and she was battling with me and two other ones. And I told her, I said, what do you mean lender hunting? She goes, I'm trying to find the best deal. And I said, well, that's great. But quite frankly, I'm giving you a wonderful deal. Like, we can all cut each other's throats down for $1, but at what point do you,
Yeah.
you know, appreciate service? You know, like I'll answer my phone at, you know, 10 a.m. on a Sunday for you. I'm okay with that.
And you have.
I know,
'Cause I've
I
called you
know.
10 a.m. on a Sunday, so.
Yeah, 10 a.m. or 10 o'clock at night. I'm like on the
Yeah,
phone all the
I
time.
know, Jason, you were thinking I was calling you for brunch, but I had a question on my mortgage, but my bad.
Well, that's okay. As long as you're
That's
calling me.
that's the danger part of being friends also.
Yeah,
Is
that's
that
okay though.
you never know.
It's life, you know, in this business, it's, you know, real estate investing, mortgages, it's just part of life right now, you know, and some people look at us like sideways because we just like talking about that stuff. That's just how we are, you know.
Absolutely. What about my favorite, right? Like we're talking about single families,
Mhm.
duplexes, triplexes. What about my favorite condos or
Condos.
townhouses?
Yeah, condos are
So
great.
what do you like? How is the lending different if I was going to buy a condo and,
Mhm.
you know, versus, you know, single family with the association and, you
Okay, well,
know,
that's a
condo
great question.
questionnaires?
That's a great question. All right,
That's
so
a whole nother webinar. No, I'm kidding.
yeah, I know, right? So obviously with the whole Surfside issue taking place last year where all those poor people got, you know, killed and stuff like that. A lot of these condos have been put on notice, all right, and they're all doing their 40-year certifications. They're all trying to get their stuff together. You're probably going to see a lot of older condos, you know, getting assessments and a lot of work being done because the lenders, okay, wasn't necessarily the government or anything like that. It was Fannie Mae, Freddie Mac. They basically came out and said, hey, we want to make sure that this doesn't happen again, and we need to start now. Okay, we're the ones that are financing these properties, so we're going to go ahead and add these things into our condo questionnaires. So when you're buying a condo, and it's whether it's conventional or a non-prime type of loan, okay, you're going to have a condo questionnaire, right? So you have what's called a full condo questionnaire, okay, for somebody that has to put down maybe 5% or 3% on a condo. And there is some condos you could put 3% down on. Or if you want to put down 10%, we can do like what's called as a piggyback mortgage, which is another exotic mortgage where we work around a full review and get a limited review. Okay, so back to our full review. The full review now has a certain question in there that asks about assessments and work being done. And if the lender sees that there is an assessment in there, they want to dig deep and they want to know what it's for. You know, like, are you fixing the concrete? Is it a slab issue, a roof issue? And that might, you know, that might not allow you to get a condo, you know, and that might go across the board for everybody. Okay, there's not going to be any lenders that are just going to take a complex that is deteriorating. You know, it just doesn't work that way. So for, you know, your traditional buyers out there, you can get away with 3%, 5%. Now, if you need a limited review because maybe the condo is okay, it's a newer condo, but their finances are not in order or they have some pending litigation, you could put down as little as 10%, okay, and go that route with it, and we'll get a limited review. And then what we'll do is we'll get a second mortgage to kind of come in behind the first in order to get to that 10%. So that's a whole nother subject. But with condos, yeah, I mean, if you're an investor and you're looking to buy an investment, you're going to put down 25%. You know, that's what you want to do, you know, as far as an investment purchase. Primaries, you know, 10% down, 5%, 3%. But the rules have changed a bit on that. They're really looking aggressively to make sure that the condos and the HOAs and the board members are doing their jobs, and they'll start denying condos. And once you get on that blacklist and you can't get financing, like, that condo's in big problem, and whoever lives there is you know, and has a huge issue.
And what Jason's really saying is, if you bought in something like that and the association changes, meaning budget wise, you know, maybe it's the assessments,
right,
and it's not financeable anymore, that now you're looking at cash buyers. So you limited your pool on the other side is number one. Number two is, yeah, when he says a full review, again, they're going to look at budgets.
Yep.
So the other thing I do want to add is, you know, if you do a 30-day closing and now you have condo like reviews, or you're doing a full view, you know, Jason or, you know, the mortgage guys is really, you know, stuck with the timeline of the associations or management companies. And what I mean by that is, he might have you approved on this end of it, but he's waiting for that questionnaire. It might take 2 weeks, 3 weeks. So you just got to make sure you add those timelines in when you're actually, you know, buying something like that. And I like the other point that you touched on is that, so maybe I got approved, right? All my, my finances, everything sounds good. And now the building doesn't get approved.
Right.
That
Right.
means no loan, right? So like, you just want to make sure that, it's just, I'm not saying no to, I mean, I bought condos and townhouses and all the other good stuff too. I'm not saying no, it's just an added layer as an investor that you have to make sure that you think about when you're on timelines and what the costs may be. Remember, for the other thing is with condo questionnaires, there's a cost, right? So, you might pay that money already. Yeah, and you might have already paid the money for the inspection, and then this happened, and you lost money on this. I can't tell you how many newbies like, I already spent money on an appraisal, and actually, what we haven't talked about. I know we've been kind of all over the place, but what are you seeing on the appraisal side on pricing? Are they hitting the numbers? Are they short on these purchases that you're seeing, or are they?
They're short.
I mean, in general.
Yeah, in general, like I was surprised. Like there was one appraisal that came in and it was over like 40 grand. It was up in Lake Worth. And this guy, he was another investor from California, and he didn't know anything about the, East Coast. He's like, I want to buy this place in Lake Worth. It was a double lot. And it came in like 40 or 50 grand over. I'm like, oh my God, you did great. Like I never see that,
Yeah.
I usually see him hitting on the money, but lately it's always short. We just had a lady right now, young first-time home buyer buying over in Tamarack. Tamarack's the new hotspot now, so 350 was the list price. She had to come in $18,000 over, so she's at 368 on a purchase, and then the appraisal came back at 330. So they had to renegotiate, and they got it up to 351. This lady's buying a house at, and that's common, very, very common, where the appraisals are short and people got to cough up some money. So
I've seen actually I met this guy on a plane actually, heading down to South America, guy from California doing a loan, IT guy, good job, has investment properties, and he was buying something here in Fort Lauderdale, and a savvy investor on the other side said, they negotiated at 470, and he had a realtor that was, I'm going to say, a little bit of a newbie, and he didn't really put a full appraisal contingency. It came back at 390, $80,000.
Wow.
And guess what? He let the inspection period go by, the loan commitment period go by, and he had $20,000 on the line.
Had to buy
and he actually, well, what's funny? He didn't buy it. He lost his deposit, or he only got $5,000 back on that portion. So you want to be careful, especially, work with a realtor, or if you're an investor, make sure you're using the new FAR bar as this contract, and you're adding those additional terms about loan commitment and timing, or appraisal contingency, if that's what you're doing. Another tip you can do is I know it's super competitive, right? And everyone's complaining, the cash buyers. So for me, I mean, I'm already pre-approved with Jason. So I'm willing to put down, let's just say I buy a house for $500,000. I'm willing to put down $50,000, no financing, but I could still do a loan with Jason. Sure. I have a backup plan. I do, obviously I have the cash to close on it, but it might get your offer accepted. But make sure you have a backup plan in case for whatever reason it doesn't get approved. But it doesn't mean that you can't do a loan on the property, but it's an easier way to get accepted your deal. So that's what some of the advanced investors are doing. I can't tell you on some of the flips, cash. 3 days before, all of a sudden here pops in a loan.
Yep.
So happens all the time. So when you're battling these other cash guys, just remember that too. That's what a lot of experienced guys are doing.
We're seeing that quite a bit with that same type of offer scenario, and there's hard money lenders out there that'll close kind of quick for you and stuff like that if you had to, but they usually want, there's some lenders that want 10% nowadays, but they usually want their 25, 30% or something like that.
Yeah. So I'm going to ask you, since we're kind of going on that too, is like, what about seasoning? So meaning I like on a property on a refi, I bought it for X amount for 150. I put 50 in it, but I'm a great rehabber. Right. So like I got it done in, 5 days, like a month. Right. So I'm in it for 200. Now it's worth whatever, I don't know, I'm going to exaggerate it and say it's worth like 350.
Mhm.
And, I know I could probably do a refi at 75% cash out, maybe 80%. How long do I have to actually hold the property for them to use the new amount? Is it right away, or
All right.
do I have to
So
wait 6
for
months?
cash out, it's going to be
Yep.
for conventional loans, cash out is going to be 6 months to use the appraised value. Okay. If you're doing a rate and term rate refinance, then it's right away. You can rate and term just means that you're only getting a lower rate. You're not cashing out any money, So if you're an investor and you bought it cash, they're really just going to look at within those 6 months, like how much you bought it cash for is how much you can go up to, So if you bought it for 500, that's they'll get you 75% of the 500. You'll still have equity in the property, but you won't be able to use the appraised value. Okay.
Exactly. So they're going to pick the lower
Mhm.
if it's within 6 months, if you're
Right.
going to get cash out. So like really what I wanted to focus on, like, hey, I bought it so undervalued. I
Mhm.
put X amount, maybe I used a hard cash or a hard money loan to get in on the deal, and like, I want to get my money out right now as soon as
Right.
possible. So for the new value, again, if you're going to cash out, it's going to be 6 months.
6 months. Yeah. Now that's for conventional loans. For non-prime
Right.
loans, there is lenders out there. They kind of fill that patch between hard money and conventional, and they'll do it right away. If it's something that's fixed up and makes sense. Obviously, you don't want the appraiser going out there during construction period. You want it all to be finished. They'll go ahead and get you up to 75% cash out with no seasoning issues, and use the appraised value on it. As long as the property's pretty much complete, I would say.
Absolutely. What about on loans? Like what, we're talking about that, and, maybe I don't have my appliances in. Like does conventional, like I get that question all the time. Like,
Yeah.
one is appliances, and the second I'm going to ask you, the second part of it is, especially here in South Florida, I got an enclosed garage illegally, or any of these illegal additions. So
Yeah.
I'm going to kind of give you 2-part question. First, appliances are not in, or do I need appliances to get a loan?
So for conventional financing, you don't need appliances. You actually don't even need a kitchen. Like you don't have to have a kitchen for a conventional loan. That's we did one like that before. That was pretty odd. For F,
I didn't know that. Okay.
Yeah, that's I forgot what they called it, but there was a phrase for it. They said, well, you don't have to have a kitchen. We're just, using the square footage. For FHA, you got to have your appliances in there because they're going to want to check that stuff out. Obviously, you want to have air conditioning and things like that, heater. So for FHA, it's a little tougher when it comes down to that, so you definitely want to make sure you have your appliances in if you're going to go FHA with it. Now that we're talking about FHA, keep in mind there is a 90-day flip rule, right? So if you're buying a property cash, fix it all up, and you want to sell to somebody who has FHA financing, you have to sign the contract on day 91 after you bought it. Okay, so you can't sign it anytime in between that, because it's an issue with FHA case numbers and stuff like that if the loan gets put in, and you have to issue a case number against it. So keep that in mind. But for conventional, you can purchase it and fix it up and flip it right away and use the appraised value from someone else who's buying it. Okay, but for a cash out refinance, you got to wait 6 months. All right. What was the other question?
Was about legal additions. Like, what are
Oh
you?
yeah.
Or enclosed garage, or that.
So
wasn't legal.
that's
I know
for
it's kind of-
conventional financing, it's up to the appraiser's discretion. Like if you have a really good garage that's done and it's tiled and maybe they raised the floor and it looks good, conventional, the appraiser's discretion might say, hey, listen, I can count that as square footage. You got a window, you got a closet, it's a room, so I can make it work. Now for FHA, if you walk into a garage and it's built out and there's a garage door still outside, and it's built out inside like an efficiency, they're going to condemn that and say, look, we're going to make it the appraisal subject to the conversion being taken out, so then you got to get someone in there that's going to knock it down and clean it up a little bit so the appraiser can go out there and re-inspect the property. So FHA is always going to be tougher when it comes to illegal additions and garage conversions and stuff like that. Conventional, not so tough. Non-prime, they fall along the conventional guidelines, like it's up to the appraiser's discretion, but they will go off a public record square footage. So if you have a property that's got 3,000 square feet measured out and it's only 2,000 on public records, lenders have that discretion to say, no, we're going to go off the 2,000 and have the appraiser adjust down to that $2,000 benchmark, you know, on the square footage. So that's I'm experiencing that right now, and I'm trying to fight with them to overturn that on a deal, you know.
Yeah, it's just a challenge. Like, if you guys haven't noticed, the lending world or the real estate world is constantly changing. So I mean, last time I did a webinar, it was about, I don't know, maybe 6-7 months ago, and I already see a ton of changes. Jason and I talk all the time. So
Yeah.
I think you gotta definitely adapt to this. One of the things that, you know, you're gonna have specific questions. Again, today was a general overview. That's what I want everyone to know. So, you know, I mean, we could probably do an all-day workshop on this.
Sure.
You know, about different kinds of, you know, financing and all the other things that go on there, which is always pretty, I know for two nerdy guys like you and I, that it's always interesting.
Exactly.
Here's the thing. So the people that are not into finance, right, are numbers.
Right.
The key is about actually having someone on your team. So that's why, you know, you don't have to know all this. You run the scenarios by someone like Jason. He's experienced. So don't get caught up in that. Like, I actually hate construction, even though I flip houses. I ask Carl Shealy, the contractor, all the time about, what about this? What about that? I just wind up learning things because I've talked to him and asked him so many questions. So you don't want that to stop you about, you know, what's happening. Like, now I have to learn everything about financing before I do a flip, or before I actually go under, you know, a contract on that end of it. But I would definitely suggest, if you're looking to use financing, you know, get the pre-approval with Jason, let him get all the documents. So as long as he's got 90% of the main stuff up there, yeah, he's going to ask you for updated pay stubs or bank statements. It's pretty easy. As I said, I've been through it, you know, with Jason. And, you know, make sure if you're actually doing any kind of financing, if Jason's asking for documents, it's not because he wants them, it's the lender, right? Don't get mad at Jason. So I think that's always important, on due diligence on time. So you got to make sure, you know, I always tell people, for every, you know, day or week it takes you to get me documents, just add that to your closing time.
Yeah.
Because you just wasted a week on that portion. And obviously right now lenders are busy. As I said, like, you want to make sure when you're looking at properties, or if you want to take out some of the cash that you have sitting there and you want to leverage it. And so, and I'll leave you with this end of it before we announce the winners too, is that, you know, right now you're hearing all this stuff about inflation, you know, 7.5. They're saying 7.5, real inflation's over 10 almost right now. And, you know, like, you could still borrow at 4 or 5%. So one of the things I did, I'm using the arbitrage. I'm actually making money on the spread by investing it in other things. So I think it's, you know, don't let, you know, there's different ways to, I don't want to say beat inflation, but that's one of the ways, because you could still borrow at a low rate too. So I know, Alexa, you have our two winners, whoever they are, they better buy us gifts.
I
mean,
know.
maybe I'll put it on my wish list for the $100. You know, what I'm looking for.
Nice.
Gosh, thank you, Jason. Again, that was
welcome.
incredible. I will let everybody know who the two winners are. I'm going to do a little drum roll. All righty. So first winner is Drew L. And the second winner is Aisha M. I will be reaching out to you both and connecting you with Jason. So congratulations. I'm so happy for you.
Yeah.
And I'm glad that you made it today, because
Drew, all right, that's good.
And I know we're out of time, so Jason, I'm going to let you, any last, I don't know, what's one thing that you would like for a newbie investor, or, you know, they want to get into financing, what tip would you give them?
Well, I mean, you know, the one thing I just want to say is, you know, you're not going to get anywhere standing on the sidelines, you know, and watching the players play. You know, Anish and his team, they've been doing this for a long time. They've had a lot of success. You know, you're part of a good group, you know, if you're listening in on this, or if you're signing up or anything like that, like, you're just part of a good group and a good group of people. But you got to take action, you know, and whether it's a condo for 50 grand or a trailer home, which honestly, I've seen some trailer homes, they're getting expensive over in Pompano. And, you know, maybe that's the route you go, but there's financing for almost anything out there. And there's so many ways to cash out. So take action, get yourself in the mix, be part of the environment and brainstorm, because there's only so much you can learn on YouTube and stuff like that. It's nice to get involved with real people that are really doing these transactions, because there's so many things that come up. It's not like the TV shows where you go in there with a sledgehammer and then all of a sudden, you're closing it and everyone's super happy. It's a lot of work, and a lot of heartache too. So that's just what I want to leave everybody with. If you need any financing, you can reach me. I'm sure Alexa will share all my information with you guys, but just take action. Don't let those rates or anything like that scare you, or whatever the noise is out there. There's no timing for investing. If not, we all would have bought Amazon at, $1, and been wealthy, so there is no timing for that stuff. You just gotta keep stacking it up, and kind of keep pushing forward.
Yeah. And,
Awesome.
I totally agree with Jason. And the first thing I want to commend you is, like, if you're actually on the webinar. So you're out there, I know some of us are still working at home, some aren't, but you're out there educating yourself. The second end of it is, again, you want to constantly be learning. I mean, I'm constantly learning. I'm talking to our vendors. You see all the events that we have coming up. And the main reason is, I mean, the industry is constantly changing. And more importantly, you should really come to the April 6th, the in-person. Now you can actually chat with Jason for a little bit. You'll see how big he is actually in real life. So that how he beats up those underwriters. He's physically probably could beat up those underwriters. And you'll
I'm very
have
nice to my
everything.
underwriters.
Exactly, right. So and then you really start building that power team, and you really want to, and I double what you said, is like waiting on the sidelines. If anything, the pandemic's really showed me is, like, you just never know when your time's up, right? What are you waiting for? If you really wanted to get into real estate, you want to get into real estate investing, the first step is educating yourself with local experts,
right?
And then, being in action. Otherwise, you're going to see all your friends and family people go by, and you don't want to have any regrets on that too. So, Jason, thank you so much.
Thank you guys. I appreciate it.
And with us, and I'll see you actually. Well, I guess it'll be a week. Actually, it's a week from today.
Or maybe sooner. Who knows? But definitely we'll be in touch, and I'll be seeing you at the next event.
Awesome. Thank you so
much.
Thank you, Alexa. Thank you, everyone.
Thank you, everybody, for showing up. We appreciate it. Have a nice day.
Have a great day, everybody.
All right. Bye-bye.